So thank you so much, everybody, for joining. We are talking Financial Freedom 101 with our fantastic tax consultant. Patti Reece is joining us to talk about the tax benefits that every online entrepreneur needs to know. Okay, so of course, with the emergence of high-speed internet, for better connectivity and social media platforms for more efficient marketing, many people are choosing to venture into home-based businesses instead of working full-time at an office, which right here, this is mine, and Patti's and hers.
Everybody.
Go. You can keep going to the next one. But while most are probably aware of some of the main benefits from working from home, which of course include more freedom, a little bit more flexibility in the schedule, less stress, but however, some are still very unfamiliar with the tax benefits that are offered when you work from home. So tonight we have Patti Reece coming to us live. And we're so excited. And Patti is going to discuss how you can take advantage of these tax benefits to maximize or minimize, sorry, your operating costs and maximize your return, which is what we want. So tonight, here's what we're going to cover. So in this free webinar, you're going to learn the benefits or the cost benefits of a home-based business, how to differentiate between personal and business expenses, some of the tax deductions that you can apply and how to compute them. And of course, the importance of good record keeping, very critical, plus a whole lot more. So this is presented by, Patti Reece is going to do our presentation for us tonight. So a little bit of background about Patti is, so Patti studied accounting at Mesa College, which is now the Colorado Mesa University, back in 1979. She began preparing taxes in 1986 and became an IRS enrolled agent back in 97. So she's been doing this a very long time. She's a fellow of the National Tax Preparer Institute, a member of the National Association of Enrolled Agents, or the NAEA, and has been a Shaklee sales leader for 40 years at the same time. So Patti Reece has also been using YFP for the past 3 years because of the flexibility it gives her, especially during tax season. While she's busy preparing our taxes, she can still keep her business rolling, which is fabulous. And she loves helping people learn how to keep more of what they earn by saving on their taxes. So Patti, I am going to turn it over to you, and let's do this.
Okay. Well, thank you so much for having me. This is my first webinar with your Freedom Project. And as you can well imagine, being April 10th, it has been a very, very crazy tax season. I pretty much do about 400 returns in a 10 weeks span of time. So I am so thankful for your Freedom Project for helping me continue letting people have all their information that they need to know about Shaklee during this time, even though I do some Shaklee during tax season, obviously. So I brought my practice from an outside office home about 8 years ago. And the benefits of working from home are numerous, and we're going to go into that tonight. First of all, you're able to deduct expenses that you're incurring anyway. If you're paying rent and a mortgage, utilities, you get to take them off, a portion of them off. We'll go into that a little bit. And everyone we talk to in Shaklee are potential clients. So expenses relating to securing those customers are deductible, and that's another beauty of having a Shaklee business. And since our businesses are not limited to one area, we can travel, and that is deductible as if the main purpose is for business. You save not only on income tax, but self-employment tax if you're an LLC or a sole proprietor on every deduction that you take. So let's look at some of the expenses that you're going to incur. First of all, expenses need to be ordinary and necessary. The biggest question I get is, what can we deduct? I have a business, and what can I deduct? Well, the IRS says they have to be ordinary and necessary for you to do your business in order to conduct your business. And they have to be, I'm going to move this up here a little bit so I can read these slides. They have to be in relation to a legitimate business activity and satisfy all the other requirements in order to be deductible on your tax return. So what is personal and what is business? Generally, you can't deduct personal living or family expenses. However, if you have an expense for something that's part business and part personal, you would divide or prorate the cost between the business and the personal parts of that expense. You can deduct the business part if it's for business use. I think that over my 30-some years of doing taxes, the biggest question I get is, what can we use for, how do we deduct the business use of our car? And how do I keep my records for that? I think most of you can probably agree that that's probably your biggest business expense. If you use your car for business, you can deduct the car expenses. And if you use your car for both business and personal, which is a large percentage of people, they don't usually have just a car they use strictly for business, then you have to divide or prorate your expenses based on the mileage. So you have to keep a good mileage log. And there's two ways of deducting expenses for your car. You can use the standard mileage rate, which this year is 54.5 cents a mile, or you can take the business percentage of your actual expenses. So the standard mileage rate, if you're choosing the standard mileage rate, you have to decide the first year that you place the car in service. Then in later years, you can choose either the standard mileage rate or the actual expenses. You cannot choose actual expense method the first year and then decide to go back to standard mileage rate. So I actually had a client yesterday that we decided, in his particular case, it was more advantageous for him to start using the standard mileage rate the first year because he qualified for some child tax credits that he didn't actually want to have a more expense this year. And then he can decide, since he bought a little bit older car, maybe later he might want to go into the actual expense method, because at that time maybe he's going to have some repairs and things that he's going to want to take. Now the standard mileage rate includes everything except finance charges. So it includes your gas and your oil changes and all your repairs, your depreciation, and insurance, everything except finance charges. So many people, I find, forget to take the business percentage of their interest on their car when they're doing the standard mileage rate. I don't know how many returns I've amended to go back and say, let's take your interest also, because you forgot to take that. If you do the actual car method, car expense method, then you're going to deduct the percentage of business use of all of those expenses I just talked about. The first time that you place your car in service, maybe you want to figure it both ways and see which way is more advantageous for you. Actual car expenses again include depreciation. I don't know why licenses is there, but depreciation expense, lease payments, registration fees, gas, insurance, repairs, oil, rent, tires and tolls, and parking fees. Now, the most important thing that you want to do either way is to keep a real accurate mileage log. The IRS requires that you keep this log, and the log shows the miles driven and the business purpose. And at tax time, you'll need the total miles that you put on that vehicle and the number of business miles. Many of my clients will come in and they know exactly how many business miles, but they don't know the total miles. And if they're going to do actual, I have to have the total miles also so that we can get the right business percentage of those actual expenses. Also, the IRS wants to know how many commuting miles if you're using your car for a job, or commuting miles are also, if you don't have an office and home, your miles from your home to your first appointment are considered commuting. And this is a little known issue that people have when they're not taking an office and home. They do have commuting miles even if they're self-employed. If you do advertising on your display on your car, I think the number one thing I get is I have a decal, or I use advertising on my car so I can write the whole thing off. That is not true. You still have to divide your expenses between business and personal use, whether you advertise on your car or not. Just because you put a magnetic sign or a decal on your car does not allow you to take 100% of your business, of your car for business. You still have to keep a mileage log and show that you use it 100% for business. So let's talk about the office and home requirements. In order to claim a deduction for that part of a home used for business, taxpayers must use that part of their home exclusively and regularly as their principal place of business. Doesn't mean it has to be a separate structure or even attached to the home. You can have just a corner of a room, but it still has to be used exclusively and regularly for business, where you meet clients or you're doing your work. You also can take on a regular basis a certain amount of storage. If you have a little spot in your garage or in another room for storage of inventory or product samples, as rental property as a home daycare. Now daycare, I don't know if I have any daycare people out there, but we do a little bit different calculation for daycare based on the number of hours per year you use your home. That's the one exception to using your home exclusively and regularly, because obviously you're probably going to use most of your home for daycare use. So some of the home office deductions include mortgage interest or rent, real estate taxes, insurance, repairs and maintenance, and utilities and depreciation if you own your home. Also, casualty losses. These expenses are prorated again depending on the percentage of use calculated. And expenses directly related to the office are 100% expense. So if you have a home office and you painted it, that would be 100%. You would not have to take your business percent, your prorated expense on that. Deductions are limited to the profit on the business. Otherwise, except mortgage interest and taxes. So what that means is if you're already at a loss, you cannot, your office and home cannot throw you into a bigger loss. However, those expenses are carried over to the next year until unused if a profit is shown. So if you have a loss on your business one year, you can, and then a profit the next year, then those expenses can kick in and offset some of that profit the next year. So how do you compute the amount of your home office deduction? Generally, the amount of the deduction depends on the percentage of the home that is used for business, and the deduction will be limited if your gross income is less than the total business expenses. A taxpayer can use any reasonable method to compute business percentage, but the most common methods are to divide the total area of your home used by business by the total square footage of the home. That's the most common. Or you can divide the number of rooms if most of the rooms are about the same size. And I've never seen that actually. We usually just use the square footage of your home office in relation to the total square footage of your home. So that's a little bit about office and home, but let's talk about travel and meals, because in Shaklee we travel all over the place. Taxpayers who travel away from home on business can deduct related expenses, the cost of reaching your destination, if you use airfare or public transportation or whatever method you're using for your vehicle, cost of lodging and meals, and any other ordinary unnecessary expenses for that business. The actual cost of meals and incidental expenses may be deducted, or this is a little known thing. You could actually use a standard meal allowance for that city if you'd rather do that. And there are some cities that the standard meal allowance is upwards of almost $80 a day. So if you're in a high cost city, you might want to use the standard meal allowance rather than actual. Regardless of the method used, you still can only take 50% if it's meals that are limited to the 50%. Only actual costs for lodging can be claimed. You actually have to have a receipt for that. And receipts must be kept for documentation. Expenses must be reasonable and appropriate. One thing that we find a lot of is if you're going, say, to a resort and you put everything on that resort onto your room, you can't always take 100% of those expenses. Just your room amount. But let's say you put massages and a lot of incidentals, you have to really break those out to make sure that they're true expenses of your business and not personal expenses. What about gifts? We give a lot of Shaklee, and actual gifts are limited to $25 per person per year, and you need to document that. However, if you're giving away products or as promotions, be sure to track those separately. Don't categorize those as gifts. Put those in as advertising or promotions. And if you give things like pens and all of those type of things, if they're under $4, they're unlimited. So you don't have to worry about those. So I get this a lot, how come I'm limited to $25 per person? And if you think about it, we could write off an awful lot of gifts at Christmas time if we were giving everybody Shackley, and we'd have a big gift deduction. But if you're giving them away as promotions, make sure that you mark those as promotions or advertising. All right, here's the big thing that we need to make sure that we do. We need to keep really good records. And there is no set way. The IRS doesn't care how you keep your records. They just want to make sure that it clearly shows your income and expenses. You might want to do your books by hand. You might want to use QuickBooks. You might hire a bookkeeper. But you do have to have some sort of system that actually keeps track of your income and expenses. Except in a few cases, the law does not require any special kind of records. The system should also include a summary of your business transactions, and your books must show your gross income as well as your deductions and credits. I think one of the questions I get very often from people is they'll come in and they'll say, I just started a business and this is what I made, and they'll give me a total of what they made. And the IRS wants to know your gross income, whatever you put through your bank account. If it includes sales tax, you need to include that and then take the sales tax back off as a deduction. If it was as simple as just reporting our net income, then we wouldn't have all these forms to do. So we have to show all of our gross income and all of our deductions. For most small businesses, the business checkbook is the main source of entries. If you run everything through your business checkbook and you use QuickBooks, then you're going to have a pretty good record of your business, your profit and loss for that year. How long should you keep records? Rule of thumb depends on the action, the expense, or the event, but the rule of thumb is 4 years. Now, there's going to be times that you're going to need to keep your records a little bit longer in case it's records of maybe some kind of investment in property that you might have bought and all the improvements to that. But the rule of thumb is 4 years. And the reason I say 4 years, it's really 3 years, but I always tell people 4 years because they get confused with the half year after we were able to file our taxes. So after 4 years, you're pretty safe. What about family employees? This is a great deduction for small businesses. Hire those teenagers or those grandkids to help inventory for your business, answer the phone, do the filing, clean the office. Have them hire them so that you can take those tax advantages. It results in a really good business deduction for you as well as income for your child. And you can actually have them start putting money away for their own college and their own expenses later on when they're teenagers or when they're out on their own. Be sure to document all the hours and in case you ever are audited. So in conclusion, by having a home-based business, you can enjoy substantial tax deductions. Keep excellent records. I find those that wait until the end of the year usually cheat themselves because they miss so many expenses. And finally, a home-based business is also more productive as you do not have to have the commute times. If you ask my husband, when I brought my tax practice home and I went downstairs for the very first appointment 8 years ago, I guess it is, he just said, "What are you grinning about?" And I said, "Because I'm at work. I didn't have to warm up my car, drive across town, open the office. It was great. I just love working from home. It's much easier also in Shaklee to attract business builders because the overhead and the startup costs are low, and we can actually help people learn to run their own businesses because they can just work from home. They're already incurring those expenses. So I think that, Kristen, is that as far as I'm going on this?
I believe so. You can.
All right.
So you're still going to be my channel changer.
All right.
Thank you so much, Patti. So what we're going to do is we're going to wrap this part up, and then we will, I see there's a ton of questions in here, so we'll make sure we get to them, and Patti can answer those for you because I don't know as much as she does. So if you'd like to discover the online business that we run and recommend, then you'll want to visit the website of the person who invited you to this webinar and ask for a guided tour of their online classrooms, and they will be happy to do that for you. There we go. Or if you want to start exploring, you can also join our group. Exploring, it is www.facebook.com/explore opportunity in groups. And I have to find that link, but that's okay. We will get that. And if you're not sure where it is, we will get it for you. And that's a great way you can discover a little bit about the opportunity and how people have used this to really make a big difference in their lives, especially when it comes to tax season. All right, and again, thank you all so much for joining. So Patti, I have a few questions in the Q&A. Some I could answer and some I couldn't.
Okay.
So the first one comes from Jeffrey and Anne, or Anne and Jeffrey. They said, is the Shaklee bonus car payment considered income, and how does this affect expensing the vehicle?
Yes, it will be included in your 1099, so that's included in income, but you get to write off your own expenses again against that. So, and you can choose, the methods that I explained earlier.
Excellent. Excellent. And then Jeffrey also asks, do you recommend incorporating as an LCC? And if you do, why?
Okay, I think he means LLC.
Oh, sorry, LLC, yes.
Okay. Well, this is a question I get. An LLC can be taxed as a sole proprietor, can be taxed as a partnership, and it can also be taxed as a S corporation. So a lot of people don't really understand what LLC means. When you first get an EIN number from the IRS, you can say you're an LLC, but then you have to decide if you have more than one member, then you're a partnership. And if you decide you want to be a corporation, then you have to ask for S status with the IRS to become an S corporation. So, as for example, my tax business is Expert Tax and Accounting LLC, but I am taxed as an S corporation. And there's some, it's taxed totally different. And so I would not recommend someone become an S corp until they're making enough money to pay themselves a reasonable wage for their profession, because you have to pay yourself a wage when you're an S corp. As a partnership, they're all pass-through entities, at least the LLC, the multi-member LLC, or the S corp. They are pass-through entities, so they don't pay their own tax. They're passed through to your personal return, and then the tax is figured. The difference between an S corporation and an LLC is that the S corp, you only pay your Social Security, Medicare on the wages you pay yourself, whereas a multi-member LLC, the partners pay their self-employment tax, which is Social Security and Medicare, on their net profit on their own tax return. A single member LLC is taxed just like a sole proprietor. The one reason that people do either an S Corp or an LLC is for the limited liability. I hope, does that answer your question?
Jeffrey, let us know if that has helped answer that question for you.
Okay.
Where is he? Awesome. Okay, great. I can't quite find it, but I'm hoping he said he did. I'm hoping. I can't find it because there's so many comments coming in. It's great.
Oh, good.
Okay, so we will keep going. Okay, the next question is, if a home is owned but under a reverse mortgage, what is the best way to expense the business portion of the home?
Well, when you have a reverse mortgage, you're still the owner of the home, so you can still take the depreciation. However, and I think with a reverse mortgage that you're still paying interest. So you can still take your taxes and your interest, your insurance, and your repairs on your home when you're in a reverse mortgage. The difference is what you're doing is you're basically accessing your equity before you sell it. Great.
No, so Jeffrey, going back to the LCC, he asks what examples of liabilities are limited.
Usually you're limited to your what you have in your business. You're limited to, many people are afraid of getting sued anymore in their businesses. So there's certain liabilities that you can are, I guess, limited liability. That's what an LLC is a limited liability company. It can be limited liability corporation. It's basically that you're only limited to what you have in the business. They can't come take your personal assets like they could if you were a sole proprietor, basically.
Okay, great. The next one we have is, can you give an example of business purposes typical for Shaklee distributors, promotion, advertising, other?
Oh, geez, there's a lot of things. That's one of the best things about having a Shaklee business, because basically everybody is a potential client. So, like I said before, of course you can give products away as promotions. So don't put them in as gifts. I mean, do your $25 limit per person. But if you're giving products away, those are samples or promotions. There's, take people out to lunch. Entertainment expenses are no longer deductible, but you can certainly take, and I never found a lot of entertainment anyway, where you pay for their golf or you pay for tickets to a theater or something. Most people like to go out for meals, so that's usually what you can do. Okay.
Excellent. So yeah, any stick of tea that you're giving out as a sample.
Yes. Yes. Take it off your shelf and mark it in as a sales aid so that you've already got that taken out of your inventory.
Mm-hmm. Excellent. And then PJ has a question. Can I hire someone to work for me in exchange for Shaklee products without reporting income received? How do I legally handle this when filing taxes?
Unfortunately, the IRS considers bartering income. So you have to keep track of what the fair market value of their labor versus the fair market value of what you gave them. So that is called bartering. For the many audits that I've gone through over my 30-some years of doing taxes, That's one of the myriad of questions that is asked. Do you do any bartering? Most people don't understand, but you really are supposed to keep track of the value of their labor versus what you gave them.
Makes sense. And then Jasmine asks, what do you do with the bonus we get for personal consumption? We have to declare them all as income, correct?
Right. Well, we get paid on our own personal use, obviously. What you have to do is keep track of what you've used for personal consumption. Now, I know a lot of you don't keep inventories. Some of us older people do because we have spoiled clients and we've been in the business a while. I don't keep a large inventory, but I keep what I use, and I keep some of the products that I know that I have certain people that are just going to call me, and Herblex is one of them. You'd never run out of Herblex for sure. But if you don't keep an inventory, there's a way to keep track of cost of goods sold, and you have to take out of your purchases what you've used for personal use. And if you don't do that, you still have to take out of what you've purchased what you've used for personal use. You have to subtract that out of your purchases. So just keep track of your personal use.
Awesome. And then Peggy, I know there's a lot of Canadians on here who are thinking the same thing. Do you have any ideas how similar these rules are in Canada?
I don't, to tell you the truth.
That's okay. From what I've done so far, a lot of it is actually pretty similar, but we definitely have to dive a little deeper into that one. I know one thing that Canada still has is we can still do the entertainment, which is fantastic.
Oh, good.
But for the rest of it, I couldn't tell you for sure.
Well, I guess I should also mention, with the new tax laws in the U.S. this year and the higher standard deduction, many people are not being able to use their mortgage interest because, for example, married filing joint, we get to take off $24,000 off of our income before we're taxed. And that includes our mortgage interest and our taxes. So if you have a home-based business, then you get to take off, if you use your house, say 10% for business, you still get to deduct 10% of your mortgage interest and taxes, and that can throw you into a larger loss. So that's a good thing.
The one time when loss is fantastic.
Well, I mean, or even if you're at a loss, if you're not at a loss, you get to take those.
That's excellent.
Expenses so you actually get the best of both worlds. You get that higher standard deduction, and you get the business percentage of your home expenses that you're paying for anyway.
Awesome. And then Steve was saying, I really like the new rule about deductions for car expenses now being able to switch to actual expenses from miles taken. Woohoo, my car is now incurring expenses as it's 14 years old.
Yep.
That's excellent. Paul Banner wants to know, should I have an EIN or versus an SS number?
If you're a sole proprietor and you're not 1099ing anybody back out, or you're not doing payroll, if you have payroll, you need an EIN number. Or if you're 1099ing like contract labor, it's a good idea to get an EIN number so that your social's not sitting out on those 1099s.
Awesome. And then Jeffrey also asks, can we deduct the cost of a product the first time we order it as it's a business expense? And I believe that is correct.
Yep. I've always done that. We've always done that, and it's held up in quite a few audits.
Awesome. That's good. And then PJ asks, do we have to send in a 1099 for bartering over $600 received in products?
Oh, that's such a gray area. IRS would like to see you do that.
There you go. Better play it safe. And then that was that one. Let me just see if I make sure I've got all these questions done. Maura asks, do you have any particular system for tracking things like promo samples, spreadsheets, etc.? Any advice on the best way to track?
Well, I'll tell you what I do. I use QuickBooks, and when I put my orders in my QuickBooks, if you know about QuickBooks, it has a split. So when you're buying products from Shaklee, you're going to split out that payment that you made to Shaklee. You're going to have freight on there. You're going to have EFT deductions if you pay with, EFT. Then all of the merchandise, what I'm going to put on my shelf, and then I also split out what I bought for in that order, and I'm going to use as samples. Let's say I bought a box of tea, and I'm going to take that as samples. Then I go ahead and split it right out in QuickBooks right then. So when I run my profit and loss, it shows that that box of tea was for samples, or that box of that protein, or whatever I give. Maybe that Vitalaser, I'm going to give away all the strips. So that's the easiest way that I found to do it, is just split it out in QuickBooks, or however else you do your books. Do it right on the purchase.
Awesome. Excellent. And then in order to be paid a bonus, we have to purchase a minimum of 250 PV. How do we claim that amount?
How do you claim it?
Mm-hmm.
Well, if you get a 1099, or if you don't, then you need to claim it on your Schedule C as income.
There you go. Fantastic. And then Priscilla asks, what about deducting medical insurance and SEPS as business expense?
Oh, SEPS, a self-employed plan? Is that what she means? Well, medical insurance, if you're self-employed and you're paying it out of your pocket, is still an adjustment to the front page of the tax return. And also with SEPS, a self-employed plan, it's like an IRA.
Ah, fascinating, fascinating. And then we'll do a couple more questions, and then we will wrap this up. And then we're also wondering, what about, just one quick question, because I know this is on my mind too, what about shipping charges?
Yeah, they're deductible for sure. I do those, like I said, I split those out when I have I put in my, my order to Shaklee. I break all that out at the time. How much of it's merchandise for resale, how much of it's for personal use, and I can keep track of all that right on that invoice.
Awesome. Awesome. Yay. I love it when you can write that off. It makes it so good. So we're going to wrap it up, guys. Thank you so much for your questions, folks. If you have any more, we're going to come back through and we can answer some of these, and on the live, we'll come back and we'll get some advice from Patti and we'll go through and answer them. So if you didn't get your question answered, there are a bajillion of them in here. It's insane. Thank you so much, Patti, for this. This is the most incredible beneficial webinar I think we've had so far, specifically for business.
Well, I'm always here to help, and I'm glad to help people, because the last webinar we had with the financial advisor, I really agreed with him. It's not necessarily, I mean, it is how much you make, but we also want to keep more of what we make. If we cannot give as much back and we can save as much as we possibly can legally, then let's do it.
Exactly. Exactly. Keep it in our pockets. Then we can buy more Shaklee products.
Right. That's for sure. We can give more away.
Excellent. Okay. Well, thank you again so much, Patti, for all this valuable information. I know for the people who are pulling their hair out with their taxes, like I was yesterday, I'm sure this has been a big, big help. Extremely appreciated. And that is all. So thank you so much, everybody. And until our next round, just want to say again, thank you so much, Patti, and we'll see you next round. Bye, guys.
See y'all later. Bye-bye.